Hello everyone, welcome to my channel, My Wealth Minds, and this is Manjunath. First of all, I like to thanks each and everyone who subscribed my channel and motivated me, and also I really want to thanks my friends, my colleagues, my family who were supporting me. So within one day, I actually subscribed almost 54. So I got lot of positive comments, and there are feedbacks, and there are lot of comments which I got it. So definitely I thanks again for all your support. So yesterday we talked about mutual fund, right? So today we'll be continuing the episode 2, and again whatever the video I'm uploading is for education purpose. Please read all the content carefully and before investing. Please talk to your advisors. So yesterday we discussed like what is mutual funds and what are all the different flow charts of the mutual fund, and also how the operation works and the organization structure. So if anyone has not watched the episode 1, please watch it so that it is a linking between the episode 1 with episode 2. So you will understand the basics of what mutual funds and all. Okay, today's topic we are talking about mutual funds version. Right? You can say mutual fund plans. So there are two type of plans which usually have mutual fund. One is a direct plan and a regular plan. As the name indicates, a direct means when you invest directly with the asset management company, that is direct plan. There we don't have any commissions or anything will be there. When it comes to regular mutual fund, it involves purchasing through a brokerage or financial advisors who charges a little bit of commissions. So I will talk more about like what is the net asset value of the direct plan and regular plan when it comes to the fact sheet I'm talking about. So let me show you like how it looks when you go to the any brokerage firm, right? So for example, if you go to grow, I'm using as I told. So if you go to mutual fund section, if you click on any mutual fund, right, you can see the direct growth. So that means it is a direct plan. That means there is no much commission involved with this plan. There is a fund manager. It is not like there is no fund managers, but there is no commissions involved and there is no advisors involved in this direct growth. That is the major difference. So most of the people who are like very little bit of knowledge of the market, right, they will actually go and invest in direct growth because there is no much commission. So that is the major difference between the direct plan and the regular plan. And whoever is new, right, and you don't know about anything about the mutual fund, and you want to know like how it is going to perform, right? So you can go and search any mutual fund, right? And you can right side if you see monthly SIP as a one time. So I will talk more details about what is SIP, system investment plan, and one time. One time is like a lump sum, right? So this will give you an idea like okay, I'm going to invest so much of amount, how much it is going to get it, right? And you can see in the doubt what is the net asset value, right? So that means per one unit, how much is the price? That is 198 rupees. 198.12 is the rupees for the one unit for this mutual fund if I want to purchase. And you see the minimum SIP amount is 100. So when I come to SIP and lump sum, I will talk more about that. You can just understand like you can see all the details here. So and if you go down, this is what I'm talking. If you want to see the return calculator, please type your like what is the 5,000. For example, you're investing 10,000 per month. How many years? 1 year, 3 year, 5 years. And one request or one thing I really want to tell you, right? Initially, whenever you invest in any mutual fund, please don't expect lot of returns or more returns in 1 year, 2 years, 3 years. Initially, you'll always see the return is less because the compounding is less and the amount you invested is less, right? So that is the reason you should always goal for the long terms. I usually prefer 10 years for the long term investment. So because your the performance of the each mutual fund will increase after 5 years. Very good investment will be there after 5 years. So please wait for 5 years. Don't withdraw within like 1 year, 2 years thinking that okay it is not performing well. I will talk about the mutual fund performance also, like how you can go and check how it is performing and all. Based on that, you can take a decision whether it should be withdrawn or it should be transferring a mutual fund to anything, or if you want to withdraw and put it into some other mutual fund. But usually mutual funds you need to invest for the long term, then only you will see a very good return. So I will give example here, right? So 10,000 per month, for example, 1 year if you see just 4.3%, but if I change it to 3 years, you see the gradually it increased to 15 years. So lot of things, right? Again, if you go to 5 years, it is more. So like that, for example, if you keep it like for more than 5 years, right? You can think how much it will be. So that is the reason, that is the main game here. So that is what the compounding is. If you are compounding in one mutual fund and monthly you're investing some amount of money, and after long term you're definitely going to get a good dinner. So this is what I'm telling is right. So you can actually plan it accordingly, and also if you okay, and if you go down, right, you can talk about like what are all the holdings this mutual fund is having. You see here, these are the companies this mutual fund, right now I'm opened ICICI Prudential Infrastructure Direct Growth. So you can name itself talks about infrastructure, right? So it will talk about all the holdings what is having, and what are the holding analysis, like equity how much, cash how much, debt how much, okay, and how they allocated based on the sector. You can come and see here, and you can see all these details. I will talk more about when we talk about the performance analysis, okay, and what is the minimum for first investment, and minimum sit how much you can start, and how it performed the returns and rankings, and what are the expense ratio, exit load and tax, how much implication, and who is the fund manager for this mutual fund. So all the details you can be seeing here, okay. So I hope you are clear about like the versions, right? So basically two different, direct and a regular one. So let me show you a small example, right? What is the like regular growth? You see, any mutual fund, if you go right, there is a fact sheet they will provide. If you open the fact sheet, just go to Google and search like Axis Mutual Fund fact sheet, or like ICICI Prudential Balance Advancement, or what are the fund you are having. Just go and type it in Google. So you will be coming to the respective page where you can download the fact sheet. If you download the fact sheet, you will be getting to know like how it is performing and everything. Okay. So based on that, you can actually see what is the performance of your mutual fund. Right. I hope you are clear about the two plans, right? So for make it simple, there are two things. One is the direct and another is the regular. So I don't want to take much. So that is what I want to discuss in this video. In the next video, we will talk more about how we can pledge mutual fund, which is very important topic. Thank you.